Imagine this scenario. You've been saving for years for a house. You finally find one that you like, but the payments are way more than you can afford or feel comfortable with. And suddenly someone says to you, hey, what if you could have 50 years to pay it off? That sounds like relief. It sounds like some promise of ease. That sounds great. Today, we're going to dig into that promise and what the trade-offs really are, because the idea of a 50-year mortgage put forward by Donald Trump's housing team is being pitched as a solution to housing affordability. But like most big promises, there are hidden costs. And as Christian leaders, you and I must look not just at the monthly payment, but at the long-term stewardship, the equity, the freedom, the covenant we make when we sign on. Let's walk through the pros and the cons together. Here's the context. For decades in the United States, the standard home purchase vehicle has been a 30-year mortgage. Some people maybe do a 15-year mortgage, but for homes, usually 30 years. It became dominant after the Great Depression and the New Deal era. But now, with home prices high, interest rates are elevated compared to what we've seen in somewhat recent years, so in the past couple of years, 6 to 7% range. The average age of a first-time home buyer is getting up to about 40 years old for a first-time home buyer. And so many Americans feel locked out of the dream of home ownership. And so the Donald Trump administration is proposing a 50-year mortgage, a much longer amortization period, meaning lower monthly payments, more time to pay it off. The director of the Federal Housing Finance Agency, FHFA, Bill Pulte, called it a complete game changer. For example, on a median-priced U.S. home, $415,000, assuming a 10% down payment and an interest rate of 6% or 6.2%, a 30-year mortgage would carry a monthly payment of $2,288, about $2,300. Stretch it to 50 years, and that payment drops to $2,022. So, yes, on paper, the monthly payment does go down, and that's the promise. But Christian leaders must always ask the question, what's the cost and who pays for it? So let's talk first about real tangible benefits that could apply to you, your ministry, your family business. Number one, lower monthly payments. As we saw, stretching the term reduces what you pay each month. If you're a young entrepreneur, a pastor, a family with kids, less pressure monthly might free you to invest more in other things, your kids' education, your church's outreach, your business growth. Number two, the entry point to home ownership. For many younger Americans, especially those approaching the age of 40 for a first-time purchase, this longer term could make home ownership feasible when it was otherwise out of reach. One expert said, even if you're renting, maybe a 50-year mortgage does give you a chance to start building equity rather than simply paying rent and never owning anything. If you're a Christian entrepreneur, owning property might support stability for your family, your business location, your ministry hub. Third possible benefit, potentially stronger monthly cash flow. Because you're making a lower monthly payment, it means more cash left over. That means you might be able to give more generously, reinvest in your business or your church, maintain margin rather than being squeezed. Our faith emphasizes margin. Proverbs says there's a dignity in finished work. There's rest in good stewardship. Or you can see a passage like Ecclesiastes 3:13. Lower payment could contribute to living with margin, aligning with biblical financial wisdom. Fourth, it could possibly be an economic stimulus. From a big macroeconomic perspective, more people qualifying for home loans could boost demand, construction, activity in housing markets. And I think that's what the Trump team is hoping to encourage, just extra stimulus in this economy when fewer and fewer people can afford a home. If you're in real estate investment, this could create more opportunity for property acquisitions, rentals, and so forth. So there are legitimate reasons to be interested in the 50-year mortgage idea. But let's peel back the layers. They say the devil's in the details. And some of those details carry very real risk, especially for Christian leaders who should be thinking generationally. Okay. Number one, much higher total interest paid. Yes, the monthly payment is lower, but you're paying over a much longer period. On that same home example, roughly speaking, the interest on a 30-year loan would amount to $547,000 for that $450,000 home at 6.2%, while a 50-year version would push your total interest to $1.02 million, an increase of 87%, according to USC finance professor Richard Green. That's a big difference. That means you might pay the home off when you're well into retirement, or your heirs end up carrying, when your heirs would end up carrying the burden of that. Proverbs 13:22 says, a good person leaves an inheritance for their children's children. Would a 50-year loan do that, or would it leave a burden for them? Number two, your equity builds way more slowly in a 50-year amortization. The early years are almost entirely interest. It might be 30 to 40 years before you've even paid half of the principal. What does that mean for you? If you need to move, if you need to sell, you need to refinance, You might have very little equity cushion because you've mainly just been paying interest. That really reduces your freedom. Churches, ministries, businesses often need agility. So if you're tying up all your capital in a slow-moving asset, it could really hamper that. Number 3, I think an increased risk of being underwater or having negative equity. Longer term means slower amortization, means more interest risk. If housing prices drop, you might owe more than the home is worth for a longer stretch. Lenders see this risk. They may demand higher interest rates on a 50-year loan to compensate. They probably will. As a steward of your finances and maybe your ministry's finances, entering a high-risk situation might undermine the freedom to give, to innovate, to leverage the kingdom work. 4th problem with it, legal regulatory hurdles and unintended macro impact. Under current law, thanks to the Dodd-Frank Act, mortgages insured through the major players typically cannot exceed 30 years. So implementing a 50-year mortgage would require legislative change, regulatory overhaul, a whole new system. Critics also argue it's a band-aid solution. Lower payments may increase demand, which is in a market with constrained supply, drives up home prices, more people qualify, more competition, upward pressure on prices. This means your cost of acquisition might actually go up. The affordability benefit might be eaten up by price inflation now that more people can afford a home. Number 5, life stage mismatch and retirement risk. If the average first-time home buyer is 40 years old, a 50-year mortgage means you're paying into your 90s. The average U.S. life expectancy is 79. That mismatch raises big questions. Would the borrower pay full term? Will the heirs pick it up? Will the home become a liability for the next generation? As Christian parents and business owners, you have to think generationally, not just monthly. Okay, so if you're leading a family business, a ministry, real estate investments, you're guiding your children into stewardship, here's how to think through this. First thing, assess your purpose for getting the house. Is it a long-term hold asset? Is it a rental? Is it a ministry center? If you choose a 50-year loan, you'll want to hold it long-term because early equity is slow. If your plan is to flip, to move, to resize in 5 or 10 years, you likely will be losing money. So you'd only want to do it if you're holding very long-term. You want to build your exit strategy or refinance plan. One of the proponents of the 50-year loan noted, you don't have to stay in forever, you can refinance. As a business owner or ministry leader, you might say, well, we'll take the lower payment now, we'll build cash flow, and then we'll refinance to a shorter term when we're stronger. But that assumes refinancing is feasible, which depends on interest rates, home value, regulatory permits, and so on. That's a lot of risk. You also want margin for generosity and mission. If the lower payment helps free up cash to give more to your church, your community, your business venture, then maybe that trade-off is worth it, but you must intentionally allocate that freed up margin to kingdom work, not just consume it on fun stuff. Luke 12:48 reminds us, to whom much is given, much will be required. If God gives you margin, use it for generosity. Don't let long loan tempt you into a bigger house, like a long-term loan, right? I think this is a big one. The lower payment might tempt you to buy a house that's really more than you need and more than you can afford. If you buy bigger, the interest cost jumps, the equity builds slower. The better strategy might be to buy a really modest home, build up equity fast, and then upgrade from strength. Proverbs 21:5 says, the plans of the diligent lead to profit as surely as haste leads to poverty. Rushing into a long-term mortgage could very easily entangle you. So think about risk mitigation and generational covenants, right? As Christian leaders, we think beyond ourselves. A 50-year obligation could tie up your children's inheritance, your ministry's asset base. If something happens to me, will this mortgage become a burden on my spouse, my kids, my ministry staff? Will the property tie up cash that could serve future generations or the kingdom? Do you have life insurance? Do you have an estate plan? Do you have an exit clause in place in case you go this route? So some alternatives may be worth considering. The 50-year mortgage is a proposal. It's not law yet, and it comes with heavy caveats. So here are some alternatives worth exploring. A 15 or 30-year mortgage with disciplined budgeting. If you can afford slightly higher payments now, you'll pay far less interest, build equity faster, and free up money sooner. If mission alignment is important, consider this. Secondly, buy a more modest home and upgrade later. Right? Rather than stretching to the dream home now, buy something very manageable, build wealth, then upgrade when your business is ready for it. Thirdly, you could increase supply or invest in housing adjacent markets. The bigger challenge isn't just the long term, it's the supply. Experts point out that unless more homes are built, affordability will stay tight no matter what loan options you have. For you as an investor and entrepreneur, maybe start building or acquiring properties in higher supply markets. Maybe fourthly, a hybrid strategy. A shorter loan plus aggressive prepayment. You might take a 30-year loan and pay as though it's a 20 or 15-year, keeping the payment option but accelerating your amortization. This gives you flexibility and avoids the extended risk of 50 years. Fifthly, monitor the refinancing environment and regulatory changes. Since the 50 years not yet available legally through major agencies, at least at the time I'm recording this, mortgage giants don't yet support it. Keep an eye on regulatory change. If it happens, consider that first wave very cautiously. So let's step back and reflect from a kingdom lens. As Christian business owners, pastors, parents, investors, our decisions about debt, property, leverage, timing matter. The Bible invites us to live wisely with freedom, not in bondage. Proverbs 22:7, the borrower is slave to the lender. Debt isn't evil, but when it governs you, it's a shackle. Personally, I've done my best to studiously avoid debt in the purchase of our properties and businesses and so on. With a 50-year mortgage proposal, we have to ask, will this serve freedom or will it postpone it? Will it serve mission or divert our resources? Will it build wealth or build a lifetime of being indebted to someone? Jesus said in Matthew 6:24, you cannot serve both God and money. Well, this is about allegiance. The principle applies. Don't let debt become your master or your foe for the rest of your life. When you're making a long-term obligation, ask, how does this align with the vows that I make to my spouse, to my kids, to my ministry? Is this a tool or a trap? Stewardship is about multiplication, not prolonging of debt. We're called to live with generosity, with margin, with legacy. If you choose a 50-year mortgage, make sure your choice amplifies those values, not undermining them. So where do I land based on the evidence and what I believe Christian leaders should do? Maybe the 50-year mortgage has a place, but if so, only with caution, with clarity, and with strategy. For someone with minimal path to homeownership, right now where the monthly burden of a 30-year kills any chance of owning, maybe a 50-year loan offers a foothold, especially if you were in your 20s or something. Even then, treat it as step one, not forever. It's not the default answer for everyone. I think for the vast majority of people, you should studiously avoid it. You know, if you're able to budget for shorter term, if you already have business momentum, if you value equity, build fast, and if you're looking for future generations, then stick with a 30-year or shorter or some kind of hybrid. Slow debt, fast equity, freedom to give. I mean, very, very cautious about debt. So watch the market. If the supply side doesn't improve, the lower payment might be swallowed by higher home prices. If interest rates on 50-year loans end up higher to compensate risk, then the payment advantage really shrinks or disappears. So as leaders, you must do scenario planning. What if home prices drop? What if you need to move for ministry? What if you retire by the age of 65? Does a 50-year loan tie your hands? So my recommendation to you, run the numbers for your situation, for your payment, your total interest, your amortization, your exit strategy. Have a contingency plan to refinance, to sell, to hold as a rental. Keep your mission central. If the lower payment frees funds for kingdom work, great, but don't let debt become a burden to your life's mission. Evaluate whether the longer term aligns with your life stage, retirement, legacy plans. Use this moment to teach your children about debt, about equity, about freedom, because your choices will in many ways become their inheritance. So here's your challenge for this week, leaders. Sit down with your spouse, your business co-owner, your ministry board, your financial planner, and ask, am I buying affordability or am I building freedom? Does this purchase align with our legacy and our mission? Are we trading monthly comfort for long-term bondage? And again, I'm not a financial advisor. I'm not telling you what to do. You need to consult with others. I'm just trying to give you some practical advice when you think about potentially a 50-year mortgage. And when you've gone through those things, decide. If you're considering taking on a home with a 50-year loan or any long-term debt, write out a 10-year plan for how you'll move that loan towards shorter terms, how you'll build equity, how you'll give generously, how you'll create freedom. Because at the end of the day, homeownership is not merely about a roof over your head. It's about stewarding your resources, your time, your mission. And debt either serves that mission or it sabotages it. So choose wisely, lead faithfully, steward boldly, and may every home you invest in, every loan you take, every decision you make reflect not just what you can afford today, but the legacy that you're hoping to pass on for tomorrow. I hope this gives you some things to think about. Again, when I first heard about the 50-year loan, honestly, it struck me as kind of a little bit crazy. I already feel like a 30-year mortgage, you're just indebted for so much of your life. So personally, I would definitely not do it, but I can't say that it's a sin or something like that to do the 50-year mortgage. I understand. I think Trump and his team are trying to stimulate the economy. I get it, but there's a lot to think through, especially with paying some crazy interest rates. So I hope this video is helpful to you. And if so, maybe leave a like or subscribe to the channel or share it with someone else. Thanks so much for your time and have a wonderful, wonderful day.